My name is Marcy Berger, and I'm the Member Services Coordinator here at AFSA. Welcome to How Real-Time Payments Drive Satisfaction, presented by Mahala Johnson and Neil Baquiran. This presentation is a part of AFSA's Business Partner Webinar Series, which allows industry experts to share timely educational topics directly with AFSA members. The webinars are designed to provide information that allow AFSA members to more effectively design, develop, and implement strategies for their company's success. For more information about the series or how to become a presenter, feel free to reach out to me following today's presentation. A few housekeeping notes. To ask a question, use the question box on the side of your screen. I'll read them aloud to all following the presentation. The slides and recording of today's webinar will be available later today on AFSA's Webinar Resource Center. Finally, you'll receive a survey after their webinar is over. Please take a moment to complete it. Your responses help us fine-tune the program so we can target the issues that are important to you. A bit about our presenters. Mahala Johnson serves as the Director of Product Management at ACI Worldwide. In this role, Mahala leads product strategy for real-time payments and disbursements. She also drives innovation for billing and payment solutions, serving healthcare payers and providers. Mahala has 16 years of product management experience in the financial services industry, including leadership roles at First Data, Western Union, and eBay. Neil Baquiran is a director in Visa's Inc. Visa Direct North American Product Commercialization Team and is responsible for commercialization and go-to-market efforts for merchants, acquirers, processors, and payment platforms. Prior to Visa Direct, he was in the North America Credit Product and Strategy Team, responsible for Visa Infinite and Visa Signature Card benefit programs. Before Visa, Neil had product, sales, marketing, and business management roles at Walmart e-commerce and Intel. He started his financial career at BlackRock in their institutional sales and global trading securities lending teams. Take it away, Mahala and Neil.
Thank you, Marcy. So just a touch on the agenda briefly. We're going to go through key points, a couple of different audience polls to understand what you would like to learn today. What are faster payments for those that need a refresher? I'm going to focus on the payment options available for disbursements with a deep dive into Visa Direct, talk about customer satisfaction, expected growth, early adopter insight, and then questions as you have them. So the key points of today's presentation is really about faster payments and how faster is happier. And then the other side of this is really taking a focused and phased approach on how you think about and ultimately implement faster payments in your own specific environment. So our first audience poll today is, what would you like to know about or learn about for faster payments? Is it preventing complaints, generating fees, improving customer service or customer experience, saving money, reducing calls, attracting new clients, tightening security, or presenting a modern image? Give everybody a minute or so to respond. Great, I think we have our poll results. Lessons learned from early adopters. Great, we'll spend a good amount of time on that in various sections of the presentation today. Thank you all very much for that. Now we have a second audience poll. And this is just a little bit of historical insight, right? How long after the completion of the intercontinental telegraph did Pony Express actually stop services? Give everybody a minute or two just to answer this. So that's probably enough time to get everybody's votes. Let's see if we can see what the results were. 2 years, 2 months, or 2 days? Well, the answer is 2 days. And that is, an example of two things. One is how fast change can happen, but the other is evaluating the market and what's going on in the industry to determine how you change your business. And I think, with the Pony Express stopping their service basically right after the transcontinental telegraph came to completion, really shows that how they were watching the market and how they understood the market was going to change their business. Okay, so let's just talk a little bit about what faster payments, what they are, right? Generally, it's a push payment, and this is different than what we normally have seen in the past, right? Generally, we have a pull payment. If we do a credit card transaction, we're pulling funds basically from the consumer's card. If it's an ACH transaction, we're pulling. This is actually a push where funds, the owner of the account is pushing funds from their account ultimately to the recipient's account. It's also based on good funds with authorization, confirmation, and clearing. So this really leads to and prevents exceptions, right? As well as irrevocable or non-revocable payments. They can't be canceled. So again, reduces those payment exceptions that we see today. It's real time, meaning that the funds will be available in the clearing account in 1.5 to 15 seconds. Another key here is that it's always on, right? It's 24/7 by 365. And again, it's an account-to-account transfer. The other thing I think is really specific towards faster payments is there are proxy services where identifying accounts is based on a social token or an alias-based token is another term for it, where the consumer or the person initiating the payment is actually transacting via their cell phone number or their email address. Okay. And so one of the areas we're going to talk about today is faster payments specifically for consumers. Payments have been around, being able to perform a payment, debiting a consumer's account for a bill pay or a retail transaction. It's been around for a long time. And most consumers perceive that to actually be real time today, while those of us in the industry understand that there's actually settlement and other activities that can happen over the next 2 or 3 days around that specific transaction. And so consumers are now like, okay, you take my money in real time, why can't you give me my money in real time? So we're going to talk about discuss 4 different faster disbursement methods today. First is push to debit, also known as Visa Direct and MasterCard Send. It's what I call a near real-time funding solution from DDA account utilizing the consumer or the recipient's debit card. SLA is 30 minutes, but Visa, shared with us that on average is about 18 seconds. Amounts are up to about 50K, or amounts up to 50K can be pushed. It's primarily a U.S. domestic solution, but it does have some international reach. And really what the consumer needs to provide or the recipient needs to provide is that debit card. Whereas real-time payments, settlement is within, 15 seconds. We know the amount in February is going to go up to $100,000, but it is only a U.S. domestic solution, and it does require providing the DDA account information. Zelle and PayPal are very interesting in that they are utilizing social tokens or alias-based tokens to support the funding transaction. Again, that's that email address or cell phone number that is associated with that particular recipient. So the recipient's not providing you financially sensitive information. They both provide real-time, Zelle to the DDA account and PayPal to the stored value account. Zelle has limits. Zelle doesn't specifically have limits, let me correct that. It's actually the receiving financial institution that can have a limit. And it is only a U.S. domestic product, whereas PayPal has an international reach. I think they have 24 different countries and 24 different currencies and 156 countries. Their maximum amount is $20,000. So that's just to highlight what those different options are today. And there are others out there. We all know that, but I just wanted to touch on these today. And so next, I'm going to actually hand it over to Neil to really provide some additional, deeper detail on push to debit, specifically around Visa Direct.
Thanks, Mahala. Hi, everyone. I'll use this opportunity to talk about one of the faster payment options, as Mahala mentioned, that's out there, in this case, Visa Direct. So what is Visa Direct? Visa Direct is Visa's real-time payment solution that allows businesses to send money to businesses or consumers' bank account in minutes. The way it works is Visa Direct reverses the traditional purchase transaction flow, as Mahala mentioned, and allows you to push funds to their bank account using their debit card already in their wallet. With traditional acceptance, such as a purchase transaction, we often think of swiping your card to pay for something. So in the case of buying a sweater at Macy's for $100, for example, you would swipe your debit card to pay, and Macy's pulls that $100 from your bank account to pay for that sweater. When you return that sweater, Macy's will do a merchandise return transaction and refund you that $100 back to your bank account. Visa Direct is basically an enhanced version of that merchandise return, what we call an original credit transaction, or an OCT, that allows you to push funds to someone's bank account in minutes and often in seconds, as Mahala showed earlier. The 16-digit primary account number or personal account number, the PAN, on the debit card serves as that access point for the networks to access someone's checking account, the same way the RTN and account number accesses your bank account through the ACH rails. We've seen a variety of businesses and verticals and use cases, applications for Visa Direct and real-time push-to-card payments. And to easily picture them, we see these opportunities in two buckets. One, faster settlement, and two, check replacement. For faster settlement, there are use cases where you have a seller, a buyer, a host, a freelancer, or a small business where cash flow, speed, and the availability of funds are really important. They may already be getting disbursements using ACH to get their funds, but they may need that money faster in order to pay for goods, for rent, or to run their business. The second is check replacement. Here, most common industries and traditional industries that use a lot of paper, lots of checks, where it's often slow and inefficient to send payments to consumers. These payments are not every day, for example, where you will get a check from an insurance company, but you'll want to get that money fast and be paid so that you can use that money for housing or food, such as in a natural disaster that we've seen very recently here in California for the wildfires or tornadoes in the Midwest. For that insurance adjuster, instead of going out to the field and pulling out that big checkbook out of their trunk, all they have to do is take a picture of your debit card and send you money in minutes so that you and your family will have funds to pay for that hotel room, that rental car, or basic needs that you or their consumer may not have because of that natural disaster. On our end, what we've done is we've done a lot of research, and we've sized this opportunity at $12.5 trillion across a variety of use cases like on-demand payroll, marketplaces, merchant settlement, insurance, as I described earlier, healthcare, government, online lending, just to name a few. Over the last 3 to 4 years, funds disbursements has grown by 48% year over year, driven by verticals like marketplaces, insurance, gig economy, staffing, and small business and personal lending. So as we move on, how do push to payments work? With a ride-sharing company, an insurance company, or government entity, or online lender looking to send payments, you'd connect to an acquirer, a processor, or a payment platform provider that is connected to Visa. Those enablers, like ACI, will have the tools a business would need to capture the card information, to tokenize the card credentials, to help that business create that user experience. That acquirer, processor, payment platform can use our API or ISO connection, or a gateway or backend processor to connect to the network. When Visa sees those transactions, we disperse those funds to the receiving financial institution and then on to the recipient. And additionally, as Mahala had mentioned, we also do, we can do this for any enabled card in the US, and then we also have capabilities for cross-border. Next slide. So what are the benefits for push-to-card for funds disbursements? First, it's the speed of the transaction. We've enabled approximately 97% of eligible Visa US debit and reloadable prepaid cards to be fast funds ready, which means that the funds are ready in the recipient's account in minutes, often instantly, often in a few seconds, as we showed earlier. So think when you go to your mobile bank account and you're checking funds, often you'll see that with regular deposits, you'll see it as pending. Well, with push-to-card transactions using Visa Direct, those funds are available to actually use in minutes. Next is convenience. Convenience of using the existing debit card in your wallet. 99% of US adults have a debit card linked to their checking account. People are familiar with their card that they already have in their wallet. There's no need to search for your checking book to find your routing or bank account numbers. All you have to do is use a debit card that you use most often. A few research studies show that millennials, as an example, prefer using their debit card for making transactions. With security, the built-in security of AML, OFAC compliance, transaction limits, and risk and management is already built into the ecosystem of the card network and acquirers, processors, and enablers. So this is all built in within the transaction set. And then finally, with ubiquity, the ability to reach billions of cards globally. Go to the next slide. So let's see, does that work? Try again. There you go. So over the last few years, Visa has enabled about 2 billion cards globally to receive real-time payments. Of the 97% of fast funds enabled cards in the US, meaning that you're able to post those funds within 30 minutes or less, there is a tail end of smaller community and regional banks and credit unions who are not yet enabled. For those FIs, funds are typically posted the next business day. Visa is working closely with all of those tail end FIs to get them fast funds enabled. When you look at what we've accomplished to date, Visa has enabled millions of connections with acquirers, processors, merchants, issuers to take advantage of this opportunity to provide funds fast and conveniently to consumers. There's a huge shift of going to digital, as I think we all know, that businesses are taking advantage of, be it person to person, business to consumer disbursements, business to business disbursements, and government to consumer disbursements. Let's see. When we look at the value proposition here, it's definitely speed, which allows you to build out a greater consumer experience, allowing businesses to send money in minutes. The Visa Direct push-to-card transaction is 24/7, 365. It's not like ACH where it takes 2 to 3 days to clear, or it's not as clunky as, say, checks. So for example, a small coffee shop owner can deposit funds into their bank account for an approved line of credit in minutes on a Sunday afternoon so that they can go to Costco and buy supplies for that next day. In terms of reducing costs, it definitely reduces costs in terms of cost compared to, say, checks, which for checks includes printing, mailing, returning checks, errors, fraud, consumer service phone calls. And it can be expensive, as I think a lot of us know, where that average cost can be between $5 and $7. The Visa Direct transaction is cost efficient, typically less than $1, but it depends on the banking acquirer, processor relationship and the services that you require and the connection that you need. You know, we've seen, great adoption. We've done a lot of extensive research and spoke to consumers and small businesses, and 9 out of 10 of them say that they would likely use their deposit to your debit card option if it was offered. As I mentioned, millennials and students in particular, they use their debit card as their primary method of paying. So being able to receive those funds on their preferred card is pretty powerful. In terms of companies that are using Visa Direct, over the last several years, we've seen many adopt push-to-card. In the beginning, roughly around 2015 or so, it started off with P2P players such as Square Cash, Venmo, Facebook Messenger, and then ride-sharing companies like Lyft and Uber saw the benefits and decided to launch their respective instant payout solutions to pay their drivers in real time. Then more players came on board, from your acquirers, processors, enablers like ACI, to businesses like Square, OnDeck, Postmates, PayActive, and most recently, you might have seen in the news, Intuit. And they all see the benefits of dispersing funds in minutes. So we're seeing adoption continuing to grow with more and more companies. They're seeing this as a great solution for multiple use cases. with merchants building out programs just focused on real-time push-to-card payouts. Some insights and research we'd like to share. We work with the ITA group to do an extensive research study to understand the funds disbursements opportunity in North America. Several big and well-known companies who process funds disbursements across verticals, including insurance, online lending, marketplaces, gig economy, and payment platforms were interviewed along with a few thousand end-user consumers. What we did hear from payers who process funds disbursements is that 27 out of 30 of them believe that recipients want faster payments and that customer experience was the primary reason why they wanted to offer a real-time payment option. Several payers also cited that faster payments and providing a better customer experience was essential in staying competitive in the marketplace. And then finally, with consumer recipients, about 40% of those surveyed received 10 or more disbursements in a year, which is almost one non-payroll disbursement per month. As disbursement volumes continue to grow, developing a recipient customer experience will become critical to these payers. Despite the availability of superior digital payment methods that are out there in the market today, payers are still tied to traditional payment methods like check and ACH. We found that almost half of consumers still receive payments by checks. And there's nothing smooth about receiving a check, as I'm sure we've all experienced. And in conversations with ITA and that they had with their payers and through this research project, they are looking for more ways to move to digital methods. Consumers said they also prefer to receive money directly to their bank accounts. Doesn't mean that they want ACH, but means I want funds in my account immediately for my use. Per ITA and their research, as consumers see more of these payments, demand for push-to-card will increase. So this is really an exciting time to see this shift to real-time payments with a variety of businesses coming on board, as I mentioned earlier, and adopting solutions for real-time payments like Visa Direct. So with that, I'll hand this back over to Mahala.
Thank you, Neil. And thank you for that great insight. So why do 77% of corporations believe faster payments will improve customer service? Well, I think Neil hit on a number of those. One and one that stands out is immediacy. Generationally there are some differences, but consumers or recipients of funds I think 74% of households that have consumers between the ages of 16 and 65 receive at least one fund disbursement per year. And it's a big pain point to the actual recipient, the speed of which that's occurring. Generationally, that doesn't actually change. It's a very constant perception that, while corporations can take my money faster, they don't always give me my money faster. And so that's one of those key areas. I think the other one is really about, the contacts that often have to occur if there is an issue with, such as a paper check, right? The calling back in, I didn't receive the check, can you reissue me? And basically the clock starts all over again. And so, we really look at which types of bill payments and disbursement would switch first to faster payments, excuse me. One where there is a need for guaranteed funds. This could be based on, the type of consumers that you work with, their specific payment performance, or where if you're an insurance carrier and you're trying to bind a policy and you're trying to do that as fast as possible, having those guaranteed funds in real time really makes for, number one, a very good customer experience, but it also makes for a more confident sales opportunity. That leads right into immediate, right? Being able to confirm that, you have the funds and or your recipient has funds, and that basically the transaction is closed and completed. And then there's also the lower cost. With and Neil mentioned that, the cost of push to debit being somewhere generally around $1, right? Just ballparking it. That's a little bit higher than ACH, of course, right? But it's also lower than, sending a check or and from a credit card side, depending on the amount that, those ranges and rates will really vary. So it's going to fall somewhere in between ACH cost and credit card cost, if you will. And then I think ultimately the different use cases, particularly on the disbursement side, where there are claim payments that need to get out, or there's loan disbursements where, again, this is a 24/7/365, so you can really change it from your traditional hours to being able to service your consumers and customers when it's best for them. Student refunds or student loan disbursements, overpayments, where maybe the original payment method isn't actually available anymore. We see this sometimes in the utility space where a consumer has been signed up for service for years and years and years, and there's an overpayment, maybe they're changing services or whatever that is, and the original funding method that was used to put the deposit down is no longer available. And then on the bill pay side, it could be last minute bill payments. Again, it could be based on that particular consumer's payment performance. And so there are a number of use cases that you may want to consider on where you might want to switch to faster payments first. And so what is the expected growth of faster payments? And I think this is a very telling graph. It's very easy to understand how the growth is going to work, right? I mean, we see it both in the disbursement, the business to consumer, but as well as the consumer to business, right? And that is, business to consumer is, push to debit, Visa Direct, the Zelles, the PayPals, the Venmos, those sort of things, all those different channels that are becoming available, along with, the clearinghouse's real-time payment rails. Consumer to business, I think one of the key areas here is, key components, is the clearinghouse's real-time payment functionality, and when that is truly is available to consumers to pay their bills or to pay for their online purchase. I think that's really where you'll start to see, and you can see it here in this graph. It's 2019, and as we go into 2020, you see that really start to grow. So I have one more audience poll for you, and this one's a little bit of fun, right? Which is the fastest cartoon character? We have Dash, Sonic, Superman, or Wile E. Coyote. Give everybody a minute or so just to respond to that. Okay, I think that's probably enough time. Superman, really? Okay, that's very interesting. Superman's faster than a speeding bullet. Okay, I can see it. So just moving on, that's just a little bit of fun to break up the presentation for you today. So what have we learned from super early adopters? And I know this is one of the main areas that was called out earlier in the audience poll. And Neil, I welcome you to join in and provide comments here based on what you've seen as well. But first of all, there's a couple of areas. It's a very phased approach, and I think we called that out as one of those key points of the presentation today. It needs to be a phased approach. You need to look at where you would actually post those payments in real time. So, working in financial services, we really, focus on how we get the money back and forth, but we don't always think a lot about where it needs to post within the client's environment. So is it in your accounts receivable system or your accounts payable system? Is it in your CSR or customer service application? So that when that consumer calls in to confirm payment, that data is in sync with what those actions that they just took. Accepting cards in all the channels with real-time authorization. That's another key component. Whether it's an IVR or a mobile application, online or inline, that's really key in being able to support real-time payments. And then consolidating payment systems. We know from working with our clients over the past that they have a number of different payment systems that they're working. They may have one for card processing, one for ACH, and one for check printing. And so really being able to look at those areas and plan out how they would approach. Neil, is there anything that you would add in that first phase?
Yeah, I would focus on, I think you hit it on the head, Mahala, in terms of faster is happier. Just taking a step back related to phase one is, thinking about the consumer first. Faster is happier in terms of, we as consumers want that Amazon or Uber-like experience. And what we've seen with the adoption of push payments, in particular push to card, is that these consumers, be it an Uber or Lyft driver or someone receiving an insurance payment to a worker for Postmates, or a small business looking to get a loan from say OnDeck. All of these experiences really have been focused around making sure that the consumer is happy, and that we would provide, they provide the best experience. So the real-time aspect in that first bullet is really powerful if you think about it. Not only is for our customers, but ourselves. We're at this day and age, and with technology, to want things right away, and that's definitely true for receiving your disbursements or receiving your payments, be it a loan, a small business loan, to receiving a payment for insurance. So I think this definitely hits it on the head in terms of having and posting those payments in real time and the ability to do so. And we definitely do that with Visa Direct. I think also the ability to provide choice. There is no real silver bullet in terms of any one solution that can satisfy everyone. We've seen the adoption of push payments via push to card as one of the many ways that businesses can offer disbursements to their clients. Yeah, I think we've seen people wanting to stay with checks, which is fine because they're used to their process and they've managed that disbursement method. But as we see with your more faster settlement and even traditional faster settlement use cases in verticals, be it online lending marketplaces, gig economy, and even with traditional players within, say, insurance or government, we're seeing that shift to provide more options and real-time payment options, because we recognize that, going back to that, the consumers, as I mentioned, it's really important to make sure that people get that real-time payment in their wallet. And a lot of reasons being, from a business perspective, better conversion, better customer loyalty, retaining that consumer. And sometimes, companies, as I mentioned earlier, build programs and around push payout methods like a Lyft or like a Square. So there's a lot of benefits by adding an option like this to your portfolio of payout methods.
Yeah, that's a really good point, particularly on making options available, choices available for the consumer. That I've heard questions about, well, what if there's too many choices? I think that's one of those things where you have to think about what you want to present to the consumers or the recipients, particularly in a disbursement, and what's appropriate for them. There is, I mentioned when I went over the different options that we highlighted today, Zelle and real-time payments and PayPal. There's some different criteria for each one of them that may potentially make it more appropriate for one consumer over another. It could be the global reach, or it could be the amount of the disbursement. So, having, logic about with what you're presenting to the consumer, the recipient, is really, to help reduce any friction in that. Give them the right choices, I think, is what I'm trying to say there. Just jumping into phase two. So here's where we've looked, to provide feedback on faster payment prototypes. And here at ACI, we're working on those. We've been working on those for almost 2 years now, depending on which, type of payment method is being used and what that user experience needs to look like. We also know that the clearinghouse has been working with the financial institutions on what, that customer experience needs to look like for a real-time payment. And so if you have those opportunities to provide feedback on these faster payment prototypes, I strongly recommend it. Take that opportunity. everybody has a business case to build, right? And particularly to get your allocation of IT resources. But, one of the areas that we see opportunities for faster payments is those customers that partner with a payment service provider, such as ACI payment or plug for ACI, right? But there's a couple of things to do in phase 2, as well as start to look at what areas you think you could test, right? Faster payments. Maybe you don't want to do the whole boil the ocean. We'll send out everything faster payments, or we'll put it across the board. Maybe you find a key area that you want to test, and by working with a payment partner, that could be a very fast opportunity to get that test up and running to see that initial feedback. So that's what I would add to phase 2. Neil, is there anything that you would add to phase 2?
Yeah, no, I would definitely echo that, Mahala, in terms of if you want to test this out and go to market. We've seen several instances from merchant senders that, they don't launch. So with some of these instances I'm going to talk about, they would do a small beta test or a small segmented market of, say, your most qualified consumers who would have that propensity to likely use a push to debit card transaction and test it out, be it, a small handful to a few hundred to a few thousand, and then slowly roll it out and see how you can continue to improve that experience. And we've definitely seen that. We've seen on the other side of the spectrum of people just rolling it out and seeing good results. I do want to echo, as Mahala mentioned, every company is different in terms of what they want to offer, but also how they go about going to market, depending on your resources, how you're working with your payment provider partner. But definitely would recommend in terms of a rolled out approach, try testing it out, and then see how that works, and then just do that slow rollout as one option. I personally have seen and have been part of integration and launch calls with some senders, and being part of that beta testing where I would beta test myself, and hearing actual users as beta test users, hearing their satisfaction is something pretty powerful. I do want to share with one particular client where they identified a particular customer and said, hey, and set them up beforehand. Hey, we're going to test this function out, allowing you to get a line of credit and pulling from that line of credit in a minute, so you can see those funds, so you can support your business. And hearing the satisfaction where we pushed the money, it was a test of a couple $100, pushed the money to that actual customer, and the surprise and delight that she shared with us was great. And I think if you're able to, and so much so that the folks on the back end, myself and a few others who were testing, were thinking, wow, this is really awesome. This was a couple of years ago. To hear that satisfaction of this consumer, her verbatims, and I'm trying to quote as best as I can, but hey, I can now go to my suppliers and pay them right away, and I don't have to wait a few days to get my money and pay off my suppliers or fund my business. So that's just one of many use cases across, and that's just for small businesses. But if you can imagine this across merchant settlement, insurance, gig economy workers, marketplaces, the ability to get money faster to your consumers goes back to the thinking of the consumer first. Again, is a powerful message to really highlight your respective businesses.
And just to add, some of the clients that we have been working on with this, it's not just the consumers that they're working for, that customer satisfaction. A lot of their service providers, they're also looking for those opportunities to excite and delight them as well. Particularly in the insurance area, right? There's a lot of service providers, whether it's a body shop or a roofer, depending on what type of claim it is, right? And to be able to pay out those service providers and help maintain the loyalty between, the insurance carrier and their service providers is another big factor that we've heard about. Anyways, so phase 3, I think Neil and I have both touched on it, is begin sending faster payments, right? Disbursements is probably one of those places where, after years of working on payments, you've probably got that fine-tuned and it's working. But disbursements or sending funds is actually that next pain point that we hear a lot about from our customers. So just try it there. And then, the final phase would ultimately begin to accept faster payments. Anything that you would add in phases 3 and 4? I think they're pretty simplistic but straightforward.
Yeah, no, I mean, I just echo, I think we all see, not only from the research that we shared today, and I'm sure you'll read on a variety of, be it news articles, your payments.com of the world, or whatever, what you see in terms of just news about real-time faster payments. The industry is going this way. We were seeing a lot of adopters over the last few years, as I mentioned, starting with P2P to, businesses and enablers being part of this ecosystem. As you guys think about what the options are, and as you think about implementing possibly a faster payment solution, know that yes, the industry is going this route. We are seeing a lot of great stories, as I've mentioned just one earlier. But as we see the efficiencies overall of providing a faster payment to consumers, ranging from operational efficiency, reducing the costs associated with paper checks, to making consumers happy, the ability to push payments to consumers. In the case for Visa, you're able to do that with your card already in your wallet. Visa Push is one of, again, many options, as we recognize that within the world of real-time payments. And I think with the benefits of Visa and push to card is really around, the ubiquity and the ability to, use a card already in your wallet, not having to fiddle around and find other ways to, get your payment method because you're using something that you recognize. But again, just wanted to, again, echo, as Mahala had mentioned, faster is happier. We do see that a lot of adopters out there. We encourage you guys to explore this further with folks like ACI in terms of what's the possible in terms of how you can make your consumers happier to getting them faster payments.
Thank you so much for that, Neil. I really appreciate that insight. So just moving along, and we have one last audience poll. So when would you like to discuss your payment strategy? And I'll give folks a minute here just to respond to that. Okay, I think we can move on now. Excellent, I like that. I like that a lot. Okay, so let's go ahead and move on to the next slide. Okay, and we're at the question slide. So I'd like to thank everybody for their time, and if there are questions, we would love to hear what those questions are.
Thank you, Neil, Mahala. And a first question is, how do you manage risk? An example, how do I know I am sending funds to the right person?
Mahala, you want me to start? Maybe you can chime in, I
Please,
guess.
yeah.
Yeah. So, I think in terms of making sure that senders are sending it to the right person, as Mahala mentioned, these are good funds in a way where it's kind of like cash. You send the money and you are making sure that the person receives it right away and they're able to use it. So it's an original credit transaction, and we are sending money to be deposited to the account behind their debit card. I think some of the controls, keeping that in mind, some of the controls that senders, merchants can have in place are, starting off with just the overall consumer experience that you have, making sure that you do things like validating, know your customer, do some KYC checks on the front end of the user experience. If you're going online, making sure that you are instilling the proper risk management tools that you currently have, doing things like two-factor authentication, for example, are some basic things that we would highly recommend. But know that along with that, working with Visa and the networks, you're still working with the same risk management, compliance, KYC, AML, OFAC controls that are in place that you would typically have with your regular credit purchase transaction. In this case, we're just reversing the return flow using an OCT. So all of the same stuff that you currently see with Visa are always are in place, along with how we have our guidelines and working with enablers like ACI. So just to know that all those risk controls are already in place.
Exactly. Thank you for that, Neil. I would add, we've had customers ask this question before, and some of them have different release strategies, if you will, depending on their experience with that particular recipient. Was that particular card already on file? If when we tokenize cards on behalf of our clients, we do run sort of that $0 off, do the AVS check, the CVV check, and those sort of things, just to ensure that the card is in hand and it does align at least at that level with the consumer. And so those are some other areas that you could consider as maybe you have what I call the release strategy. Again, known customer, card on file forever, right? That can go now. If there are needs to do additional due diligence on that specific transaction, you think about what those processes could potentially be.
Great, thank you guys. Another question is, how do I execute and how long does it take to launch a push-to-card solution?
Well, I'm going to give you the product manager answer. It depends, right? It depends on a number of factors, right? If you're working with a payment partner, do they have the options available for you already? Is it something that you basically have a slight modification to your existing integration? It could go very, very quickly in the sense that it's something they would enable on your behalf, and then you would simply feed those transactions to them. Or it could go the other way, right? It could be that, if you're developing in-house resources, when those can get aligned, do you have skilled resources? Those sort of things. So my product manager answer to that is always, it depends. There's a lot of variables into how fast that can go. We can put a client live, an existing client, just to qualify, right? Existing client live in around 30 days. But again, you want to make sure that you've done your planning, you've looked at the systems you want to update, is it a segment of consumers or recipients that you want to utilize? And so there is some pre-work, if you will, to support going live quickly.
I'll echo that and say, I've seen implementations range from a few months to a little bit more than that. And it all depends on who your current payment provider is. If your current payment provider does offer the option to push to card, it might be easier for you to work with them directly and then implement the solution. Obviously, there's contracting, there's additional services you may need, there's testing involved. So a lot of the fun things, as I put my product manager hat back on as well, that come with launching any product. So do know that beforehand, there is some work involved, but it could be easier depending upon who your the variables, as Mahala had mentioned, in terms of launching. But I think some best practices that we've seen in terms of going to market are having the right plan in place for having the right provider, understanding what your current provider is capable of. If you don't have a current provider, can someone new like an ACI help you get to market faster and do the beta testing that we've talked about? So again, in terms of timing, it does depend upon your needs, volumes, additional services that you might require for your client, the user experience, how you're building that out. But again, I think it depends on timing needs, as well as the ability for your provider to put you out in market. So.
Great. Thank you so much, Neil and Mahala, for sharing your expertise with us. Remember, the slides and the recording of today's webinar will be available shortly on the APSA's website under Webinar Resource Center. Thank you so much. This concludes today's presentation.